There we go now. Okay, cool. So, welcome to tonight's session. Sound's on now. So, yeah, we didn't have sound for a second there, but we are up and running. So, as I said, welcome to this evening session titled How to Spot Opportunities Within the World's Most Traded Metal, aka gold. So, I'm really excited tonight to, walk you through one of the most dynamic and reactive assets in the market. Now, whether you are trading intraday moves or scalping small bursts of volatility, this session will give you structure. It'll give you context. It will give you confidence when approaching XAU USD or even XAU ZAR, because yes, you can trade that at ATFX as well. Now, before we begin, let's clarify one thing. Trading gold is not about guessing where price will go next. It's about reading behavior. It's about understanding why price moves the way it does. Gold, I'm gonna get some flack for saying what I'm about to say, but gold is an emotional market. It reflects fear, it reflects greed, and it reflects uncertainty, and it does this all at once. So, for short-term traders, this emotion becomes opportunity, but only when approached with structure and patience. So by the end of this webinar, you'll have a clear framework for trading gold intraday. I'm going to look at scalp trading here today. You're going to get a checklist to guide your execution and an appreciation for how fundamentals and technicals interact in real time. So before we do dive into the session, as always, please remember that everything that I will be stating during this session should not be taken as financial advice. Everything that I will be sharing during this session is for informational purposes only. And at no point in stage during this session here tonight will I be providing financial advice. I just want to see why. There we go. Let me just see if this is actually working. Yeah, there we go. Okay. Sorry, we had a bit of a glitch there. The disclaimer didn't want to come up. Actually, let me put it back on for a second so you guys can all see that. Then, as always, please remember that if you participate with me during this session, meaning you ask me questions, you answer my questions, you will stand a chance to win a $50 funded account with ATFX. So I already see I've got my brother from Bloemfontein lighting up my comment section. So absolutely loving it. If you are unable to comment, please remember that you have to be subscribed to the channel to be able to participate in the comment section. And as always, please just remember to smash that like button. If you'll be doing all those things, this is going to be an absolutely fantastic session. So let's get into tonight's session. Let's get into the nitty gritty and let's get going. I see Gavin also popped me a message there. Good evening, Gavin. Welcome. So, what is the role of gold in the financial markets? So, when we talk about gold, we are really talking about human behavior in market form. It's the asset traders rush to when uncertainty rises and the one they abandon when confidence returns. So, gold's value isn't only in its metal, it's in its ability to reflect global sentiment. For short-term traders, this volatility is pure energy. Every reaction, every breakout, every rejection tells a story. Our goal is to recognize the rhythm, to trade with the market, not against it. So here's a question for you. Let's kick things off. Let's start getting some interaction. Let's get that comment section going a little bit here tonight. And I want to kick off with the first question. So first question for tonight is, what do you believe influences gold more? Economic data or investor sentiment? So comment one of the two options for me into the chat section. What do you believe affects gold more or influences gold more? Economic data or investor sentiment? Would love to hear from you. Would love to see your response on that here tonight. Now, fundamentals are, in my opinion, the heartbeat behind gold's movement. The first and most powerful driver is interest rates, because gold doesn't yield interest. This is a very important fact about gold that we need to understand. So whenever the US interest rate gets released, such as what will be released tonight, this is very important because why? Gold doesn't yield interest. So when bond yields rise, investors prefer fixed income assets over gold. When yields fall or inflation increases, gold becomes attractive again as a hedge. Next, the US dollar is gold's pricing partner. So remember, gold is denominated in dollars. So gold is the quote currency for gold is dollar, or okay, if you do trade, XAU ZAR, the quote currency will become ZAR. But in general, gold is denominated in dollars. So any shift in US dollar strength immediately impacts the price of gold. A strong dollar usually puts pressure on gold. A weak dollar tends to support it. So, however, there are exceptions, especially during geopolitical crisis, when both can rise together as traders seek safety. And we actually saw this with the entire geopolitical crisis between Russia and Ukraine, as well as Israel and Hamas. So there's been very recent examples of this as well. And then finally we have inflation and monetary policies. So when central banks talk about tightening, gold can take a dip. When they signal easing or rate cuts, gold often rallies. So short-term traders use these shifts to anticipate bursts of volatility, not to predict long-term trends, but to trade the reaction. I hope this is making sense so far. I do see there's a lot going on in the comment section. A little bit earlier I saw, so investor sentiment, economic data. Guess who's home? I love that. Economic data, mostly investors follow, 100%. Love it. Okay, investor sentiment. You guys are even sending each other messages now in the chat section. I love this, community. That's what ATFX is all about. I love that. So, yeah. Okay, cool. Moving on. Oh, let me just take a sip. I'm getting way too excited. So, let's elaborate a little bit further on the relationship between gold and the dollar. So, this is probably one of the most famous relationships in all of trading, which is gold versus dollar. So when dollar strengthens, as stated, gold typically falls because it becomes more expensive for holders of other currencies. So when the dollar weakens, gold gains appeal globally. It's cheaper and demand would rise. But here's what separates experienced traders from reactive ones. So correlation is not constant. I will repeat that. Correlation is not constant. Sometimes gold and the dollar would move together, usually during periods of global stress when investors rush into both as safe haven assets. Because remember, both the dollar and gold are considered safe haven assets. So that's why short-term traders don't just watch gold. And yes, if you want to scalp trade gold, you can't just look at a gold chart. Okay, you will get hammered if you are only watching a gold chart. You need to track DXY as well. You need to track yield curves and even equity sentiment. Okay, indices can be a great leading indicator for gold. Those connections often warn of turning points before they appear on a gold chart. So if you start looking at, like I said, DXY, yields and equity, so indices, you will be able to spot leading signals for gold on those as well. Question time again. And remember, I have this $50 check that I want to give away today. So keep that interaction coming. Who here has ever noticed moments when both gold and dollar has risen together? And what does this usually signal to you? Okay, that's my biggest part of the question. So have you ever spotted this? Yes or no? And then if yes, what does this usually signal for you? Okay. While you answer that, I'm going to move on to the technical behavior of gold. Okay. So if fundamentals explain why gold moves, technicals tell us where and how it moves. Gold is extremely technical. It respects structure beautifully. Key round numbers like 2,500, 3,000, 3,500, 4,000. These act as magnets for liquidity. I mean, even look when we broke above 4,000. Where did we go? 4,500. Like it's that magnet for liquidity, you know? And that's where traders set stops. That's where institutions tend to hunt for those stops. What happened the moment gold hit 4,500? It went woo, all the way back down. Why? Liquidity. So in short-term trading, these areas create the best opportunities. When you see sharp moves above previous highs that quickly reverse, that's a liquidity sweep. And we're going to have a look at an example just now as well. So institutions collect orders and then move the market in the opposite direction. Your job is not to chase the first move, and we're going to look at that, an example of that tonight. Your job is not to chase the first move, but to wait for the reaction that confirms intent. So with that being said, let's talk strategy. Let's have a look. Let's talk, short-term gold trading strategy. So simple, structured, and scalable strategy. Start by mapping out your Asian session ranges, okay, you will see that when London opens, that range normally gets tested. If price spikes above the Asian high and then rejects, that's your first clue. That's often a liquidity grab, a sign of institutional participation. Then wait for confirmation. What are we waiting for? Break of structure, change of character to show momentum shifting. Once you see that, your entries come on the pullback, not during the chaos. Okay? Who wants to look at an example of this? I need some comments. Would you like to look at an example of this specifically quickly here tonight? It's not really part of my preparation. I'm gonna draw everything with you. I feel like I want to do that for all of you tonight. Let me know. Yes, no, maybe. Come on, I need this comment section to light up like a Christmas tree right now. Okay, I need some yeses here. Okay. Only got one from Gavin. Fine, for Gavin I'll do it. You know, if one says I'll do it, it's fine. Okay, so let's pop it on. Why is my thing keeping on freezing tonight? Like, I don't understand. Because now I need to do this again. Okay, here we go. Okay. So, you can all obviously see my gold chart. Let's have a look at today. Let's see if there was a setup for today. So let's first start out by mapping the Asian session. Today is Wednesday, so that's midnight right here. And then, so this is basically the Asian session here at the moment. Now, this is actually quite beautiful to see. I didn't plan this. I promise. I didn't plan this. Because now what happens? So there's your Asian session zone. Okay. What happened during the day? We had that breakout and we had the move. So that first impulse move, which is now coming back for that retest. So now what would happen is, this is exactly what we said. Now we wait for the chaos to finish. We wait for, we've already had this structural move that has now taken place, and we're waiting for that retest now. So again, this is now going to come beautifully down up to here. Now we can even drop down to a 5-minute time frame. All we want to see is, and you can see here, look at this. There's that equal low that formed right there. So there's your equal low. So on that equal low, now we're going to see change of character, and that's our entry. Because why? We had the break, we had the retest, then we have the trade. So here's basically, like I said, I didn't plan this. It was just a very nice setup already done here for us tonight. Let's look yesterday. So Monday, so Tuesday. Okay, so let's go back all the way to here. There we go. And then that's Asia right there. Okay, so there's your Asian session right there. And what happened at that specific point? Again, so here we had it relatively quick. And also, there was a different trade that you could have taken if you wanted to. There's obviously a larger element of risk. But, I mean, if you look here this morning around 9 o'clock, what happened there? There we can also see we had this breakout out of the Asian session. We had that pullback. And then we had the break of structure, which again, then you can just place your buy order there. You place your stops just below these low points over here. And remember, I'm on a 5-minute time frame here. And then you go 1:1:5 ROI. So that would have been your TP right there. There's your very easy setup. And you can check this every single day on gold. Looking yesterday as well, here you can see Asian session, break, retest, break of structure. So what do? Short there, stops there, TP 1:5. Simple, easy setup. Boom, boom, boom. Okay? And if you just continuously do this, so map out your Asian session, wait for that break, wait for the retest, break of structure, and then pure price action in motion, giving nice, clean setups. Okay? That's kind of what we're chasing here. Nice, clean setups. Does this make sense? Okay. What are the session times GMT2? So I run it normally from midnight GMT2 to around 6 a.m. That's normally what I map out as my Asian session if I use GMT2. That's for FX Beast's question. Okay. Now, once you've waited for that confirmation that we've just discussed, break of structure, change of character, that shows momentum shifts. Once you see that, you enter on the pullback, not during the chaos. You enter with the pullback. So, and then your stops sit just beyond the liquidity sweep area and you target that next liquidity pool. I normally like having set targets, 1:1, 1:1.5, especially trading on a 5-minute time frame. We're not aiming here for 1:10. I just I'm getting in and out of the market, short scalping trades here, okay? And this is how professional intraday traders approach gold, okay? It's not about guessing, but by waiting to see how the story unfolds, okay? Let's do a question again. We've got a few more people here now. So when you spot a false breakout on gold, do you normally wait for confirmation, or are you classic 101 FOMO trader who just jumps in way too early? And then how often does patience pay off in your trading? When you just randomly jump into the market because the market is spiking, do you normally get your fingers burnt? Let me know in the comments. I would love to hear from all of you. I think that would be a great starting point for us to continue this conversation here tonight. Now, I wanna move on, mainly because I'm only on slide 6 now, and I've got like 16, so I need to start speeding things up a little bit tonight. But I just wanted to show you all those charts. So, like I said, I went completely off script, but I wanted to show you that. So, yeah. Okay. Let's continue. So, I want to discuss timing the market. Okay. So, gold behaves differently depending on when you trade it. During the London session, we often see price discovery. The market breaks out of the Asian range and then sets the tone. During the New York Open, volume surges and real momentum begins. The overlap between London and New York is where you'll see the most explosive intraday moves. And this is the prime time for short-term traders to normally capitalize. And outside of these hours, liquidity normally thins out and spreads widen, which makes execution riskier and stops more vulnerable. So if you align your trades with these peak liquidity windows, your strategy will instantly improve. Not because you're not because your system changes, but because your timing improves. And as your timing improves, this is now when you are supposed to learn to manage your risk and your trade execution. Gold rewards structure and punishes emotion. Gold is one of those instruments that will punish you when your emotions get involved, okay? That means before you click buy or sell, you should already know where you are planning on getting out, both profit and stop loss. Your stop loss is not a suggestion when trading gold. It's a boundary for survival, okay? As a short-term trader, your job isn't to win every trade, it's to execute your process flawlessly. If you lose small. If you win methodically, okay? Look at me using beautiful English here tonight. Over time, that consistency will compound into confidence. And then confidence creates sustainability. I hope I'm making sense here. I hope I'm getting through to you guys here tonight. Let me see some comments. Yes, please. Thank you. Okay. Good evening. I never wait. Ish. You know. Yes, it always ends with a loss. Very true. Very, very true. Okay. So general consensus here is the fact that when jumping in early, when emotions get involved, like I said, gold will burn you. It will punish you if you allow your emotions to get involved and just jumping in and just running with it. So, okay, cool. And part of all of this is your psychology of trading. You know, trading gold is as much a mental challenge as it is a technical one. The volatility, the speed, the sharp reversals, all of it can test your mindset. Now, many traders master analysis, but they fail at the emotional control. They overtrade after wins. They hesitate after losses. And they spiral when volatility comes into the market and spikes. Your greatest edge within trading gold is not your setup. It's your state of mind. When you stay calm under pressure, you see what others miss. You stay consistent. Your results follow naturally. So I think I want to ask another question here, because I'm loving the interaction I'm seeing here at the moment. How do you handle emotional swings after some consecutive wins or losses? And I'm adding both here because the fact that with wins, euphoria can take control of us and push us into a certain direction. But with losses, depression can do the same thing. So how do you handle those emotional swings that you can get? And, you know, what helps you? Because again, this might help someone here tonight. What helps you reset your mindset quickly? Okay? To just take you back in and say, you know what? Pull yourself towards yourself and let's keep going. Would love to hear those comments. I'm also going to show you guys a bit of a different practical example as well. This is a setup from yesterday that I also want to show. Just different ways to use price action and that pullback method that I just discussed as well. So let's put everything we've covered into, a real short-term example, which, I mean, we've been talking about price action and pullbacks and setups for weeks now, okay? Let me pull up a chart here. I'm sure you guys can all see my screen. So here you can see this was gold 15-minute time frame. This was yesterday. Again, just looking at clean setups here. So here you can see gold breaking out and then pushing into the support level here around 3,930. Why that support? Because why? That's your breakout. And then there you can see a sharp spike below that previous higher high. So there's your previous higher high. And then we got the sharp spike below that previous higher high. That's your liquidity grab. That's what's grabbing that liquidity and taking out the stops. And then immediately forming that rejection candle. You can all see this, I hope. Now, what do we wait? So what do we do? So this is our first clue that the market has just completed its liquidity sweep. So next we wait for confirmation. So when price breaks short-term structure, again, what we've discussed, break of structure, change of character, that's when we know control has officially shifted and the market is not just going to continue in this downward channel. So dropping down to a 5-minute time frame now. And here you can see, okay, there's that first initial move. Okay, remember, we don't trade the first initial move. We trade on the retest. So our entries are not impulsive. They are calculated. We wait for the pullback to the structure level. Usually the same zone that trapped the sellers into a trade. Because why? When that initial spike happened, all the sellers jumped back into the market. As they jumped back into the market, it's because the fact that they thought, well, the trend's continuing. Smart traders wait for confirmation. So there you can see. Now we wait for that pullback, that liquidity zone, that structure that's, like I said, usually that exact same level where the initial spike would take place. Again, we need to know where our exits are going to be. So placing stops towards the next liquidity below that spike, and then TP 1 is to 1.5, maybe towards here we had that 4,020 level, kind of aiming for that. And then you can see how beautifully this just played out in a 5-minute time frame. Okay. Simple, easy scalp trade setup. Again, wait for the structure to change, wait for the noise to finish, and then we get into the market. Again, adding on to everything that I stated earlier, this is one super easy setup, which done consistently can be enough to define your edge. The goal here isn't perfection, it's repeatability, okay? Let me see what's going on in the comments. If I've made a loss, I also walk away and then identify the mistake I made to better understand my next trading day. I like that. I started using Asia and London and New York trading times about 2 weeks ago, and I get to see a lot better how to place my trades. I like that as well. I stay very neutral through wins and losses because traders never personalize losses. For clearing my mind, I hit the gym. I like that. After my daily limits for losses are hit, I stopped trading immediately. In the past, I didn't do so, which has cost me dearly. Wow, I'm loving these comments, guys. I really am. I think let me add to the comments, Tell me, when you spot now, and by now you should be able to spot this. I mean, we've been talking about liquidity grabs and everything for about 6 weeks now. So when you spot liquidity grabs like what we just saw, what's your confirmation trigger? Have you looked at things similar to what I'm discussing? Are you getting better at waiting for that break of structure? Or do you just kind of get in on the next candle rejection? How has your trading changed as we've gone through these sessions? And if you are new to my sessions, I would really urge you to go and watch the last couple of week sessions where we discussed scalp trading, we discussed market structure, we discussed smart money concepts across 3 sessions. Okay, it's about almost 4 hours of content. So I would really urge you to go do that as well. Okay. So let me know in the comment section. I would love to hear from all of you. So as we kind of continue here now, I want to also discuss common mistakes that traders make trading gold. Okay, gold is a beautiful market, but gold is also a brutal teacher. Most traders lose money not because their analysis is wrong, but their discipline breaks under pressure. And if you've never been under pressure, gold will put you in a pressure cooker. Okay, so let's talk about the most common traps. Number 1 on the list, hands down, we are not even debating about this, is entering too early. Okay, gold moves fast, and it's extremely tempting to catch the move early. But early entries usually mean entering before confirmation. Patience is your defense when trading gold. Wait for structure. Don't predict it, okay? Trade with it. Number 2, second mistake people make trading gold, ignoring the session context. Okay, the 3 sessions during the day are of extreme importance when trading gold. What happens during the Asian session often sets liquidity traps. If you're trading during the London or New York session, always reference those session highs and lows. They act like magnets. Number 3, over leveraging. Now, this is probably the biggest destroyer of confidence. Even the best setup fails sometimes, but when your risk is too much, one loss can wipe out a week's worth of discipline. This is why you need to know where your exits are and where your stops are. You need to calculate your position sizes so that one trade doesn't ruin a week's worth of good work. Number 4, after a losing trade, the urge to make it back quickly is dangerous. Don't give in to that urge to revenge trade. It shifts you from analytical to emotional trader. Remember, every trade is independent. The last trade does not owe you a win. Okay? So if you get a loss, it's not that the market now owes you a win. Gold will reward your patience and your process. If you trade emotionally, you're reacting to gold. If you trade with structure, you are managing gold. Now, with doing this, you will find consistency. And consistency is not a byproduct of luck. It's a result of structured repetition. If you master just one step, like the breakout and pullback structure that we just looked at, and you execute that 100 times, you'll know exactly how it behaves in different conditions. You'll build confidence, and the confidence reduces hesitation. Your journal is also your biggest trading mentor, okay? I might be big, but I'm not your biggest mentor here, okay? Your trading journal is going to be your personal biggest mentor. Record every trade, not just the technicals. Include your mental state. Were you calm? Were you chasing? Were you distracted? These insights expose behavioral patterns that you can refine. Every losing trade is a lesson. Every journal entry is data. And data is a trader's best friend. Professional traders aren't perfect, okay? Trust me, we really are not. But one thing we are extremely self-aware. We understand that trading is not about predicting the market. It's about mastering your own responses to the market. And I hope I'm making sense here tonight. I'm loving the comments, by the way. There's so many. I'll read through all of them just now. Like, I just want to get through the session first. But so if there's a question, maybe start with like question. Analysis is not the problem, like you said, sir. Identifying structure, waiting for the break of structure. But psychology is still challenging, but a continuous learning curve to fruitful trading. I love that. Whew. Where am I? So we're still on the psychology part. In fast markets like gold, psychology isn't a side topic. It's the main one. When markets spike suddenly, trust me, your body reacts before your brain does. Your heart rate will increase. Your adrenaline will kick in. And once all of this happens, logic just fades. And that is when most traders start making emotional decisions. Cutting winners too early or holding losers too long. But there's good news to this. The antidote is structure. Structure gives your brain something logical to follow. When your emotions start flaring up, and here's the key to your mindset. Don't try to control the market. Control your reaction to the market. We're not here to control the market. We're here to control our reactions to the market. And if you don't do that, the volatility that destroys other traders, or actually when you do that, when you control your reaction to the market and not let the market control you, that is when that volatility that destroys other traders becomes your advantage. By doing this, you can eliminate emotions. You can learn to trade despite of all of this. And traders, that's what separates a disciplined scalper from an impulsive one. Okay? And I hope I'm talking to someone here tonight. And I hope something is clicking somewhere here. and that it is making sense in some way or another. So yeah, let me keep going. So every professional trader, regardless of experience, needs to journal their trades. Your journal is your mirror. It doesn't lie unless you lied in your entries. Your journal doesn't flatter you. It's just reflecting what happened. So, as I stated, write down what setups you took, why you took them, how you felt before, during, after, and then review all of this on a weekly basis. When doing this, you will start to see patterns, not in the charts, but in your behavior. Maybe you perform better during London hours, or your emotions spike after 2 wins in a row. You know, these insights will refine your edge more than any indicator that I can give you will ever do. Continuous improvement comes from being self-aware. You don't need to overhaul your strategy every week, because most of you do that. You choose a new trading strategy every week. You just need to evolve your behavior around the strategy you currently have. That's it. Okay. Let's have a look at a bit of a checklist for scalp trading. So here you can take a screenshot. You know, this is a simple checklist you can apply every day before you trade gold. Number 1, we need to have a look. Where's the liquidity? Look for previous highs and lows. Number 2, has liquidity been swept? A false breakout or a rejection? Are you seeing this? Number 3, has structure shifted? Are we seeing that break of structure, change of character? What is this? This is our confirmation. Then number 4, is there a clean entry point? What is a clean entry point? A clean entry point is a pullback to the fair value zone. Number 5, what's my risk? Stop losses need to be predefined. Position size needs to be correct. Otherwise, you will be destroyed. If you can't tick all 5 of these boxes, the answer is simple. Don't trade. Discipline is knowing when not to trade, just as much as when to act. Traders often think success comes from more indicators, more setups, more screens. I've seen traders with 6 screens, with different things, looking at the same chart. But in reality, mastery comes from less. When you strip away the noise and you focus on one clean process, you start to trade with conviction instead of confusion. You stop asking, should I take this trade, and start saying, this trade fits my plan. And by being able to say this, that shifts your mindset and changes everything. Gold rewards clarity, and clarity comes from simplicity. It's as simple as that, traders. The key to long-term success when trading gold isn't one winning trade. It's the habit of trading well. Your process becomes your safety net. Even when markets change, your process gives you something stable to rely on. You can't control outcomes. We need to accept this. But you can control your decisions. And that's where consistency is born. Think of every trade as a brick in the wall. Okay? Each disciplined decision strengthens your foundation. Each impulse weakens it. The traders who build with patience always end up standing taller. It's kind of that simple. Okay? And we have been going for a while now, and I'm almost at an hour. I'm going to go through the comments and answer your questions shortly. So, as we are wrapping up our session here today, let's summarize the key takeaways. Gold, one of the most exciting markets to trade. No one's going to argue this. But for those who respect its rhythm, it rewards clarity, patience, and emotional control. To succeed, you also need to combine your fundamental awareness of what drives gold with technical precision and structural based setups. And if you need assistance with the fundamental part, just watch my market brief every single morning and you'll automatically get this. Adding on to those takeaways, trade with discipline. Record your progress and measure success by how well you executed your plan, not by how much you made. Every session is an opportunity to refine your craft. And at the end of the day, please remember, you are not competing against the market. You are competing against your own impatience. I hope that makes sense. Let me see what comments I have. Thank you for the session, a learning curve that I will definitely follow. Maseka, you are absolutely most welcome. Yes, been mastering my patience and discipline. So proud to read that. Analysis is not a problem. Okay, I already think I read that one. Yes, definitely, completely understand, and you are making sense to me as I am actually experiencing all these things that you are describing. Wow. Thank you so much. What time is CPI tomorrow? Bridget, CPI is not tomorrow. CPI was on Friday. That passed. But we do have a live analysis session tomorrow at 11. But no CPI tomorrow. Are the achievement sections in your profile, of your account help you practice your strategy? Rokash, you're going to have to clarify that question for me, please. Andre, it's more possible to give the times of, is it possible to give the times of there's 3 trading sessions, not 4. The open times, the closing times, and then the overlap times. Yes, it is possible. Give me a second. I can actually pull it up for you guys here so we can have the exact. Let's do this. Actually, I think there might be one here. Let me just quickly check. Just give me a second. Let me just see here. No. That's just yield curves. Here we go. Found it. Okay, so let's do this. So here you can see so this is GMT +2. Sydney session starts at midnight, finishes around 7. The Tokyo session goes on a little bit later, but it also starts later. It starts around 3 o'clock and then ends at 11. So there's that. The London session starts at 10. Because also remember it's daylight savings. So London session starts at 10, ends at 7 p.m. And then the New York session starts at 2 p.m. South African time and ends at 11 p.m. South African time. Okay. There you can see we are currently only in the London session because that's how late it is currently. I hope that helps. Let me see what else we have here. Is it okay? So I did answer Andre. Cool. How do you then approach gold long term? Well, again, you can do the same long term. You just go on to higher time frames. Again, wait for the break, wait for the impulse move, wait for the retest, and then go from there. So you can apply the same strategy regardless of your time frame, and you can trade it long term as well. Okay. Are there any chat groups to join on any platform? Andre, we are working on an ATFX Telegram channel that you should be able to join very soon. Okay. The process isn't the rewards. Thank you, bro. Absolute pleasure. Thanks a million times, ATFX, for your kind shared knowledge. It's only a pleasure, Tatu. So, cartels in the house. Love that. Okay, perfect. Traders, thank you very much for joining me this evening. I do hope that during this session I was able to provide some clarity on how to trade gold, how to approach this very unique market, and how by approaching it in the correct way you can truly master it and, benefit from it. So again, thank you so much for joining me. Like I said, I do hope this was useful, and I will see you all tomorrow at 11 for our live analysis session. And then I'll see you next week, Wednesday, for our next masterclass. Next week, Wednesday's title is Trading Indices in December, because, we're going to be discussing the Santa Claus rally. If you have no idea what I'm talking about, come and join me next week for that masterclass there. And then, traders, I hope this assists you in going forward and trading gold like a pro. Until then, stay sharp, stay focused, trade smart, and keep learning. Have a blessed evening.